This week, Bitcoin wrestles with the $70,000 mark. Binance sues the Wall Street Journal over alleged defamation. And Carlos Domingo of Securitize weighs in on new guidance from federal regulators around tokenized security. Welcome to CNBC's Crypto World. I'm Mackenzie Sigalos. Crypto markets are in the red over the last week as investors receive mixed signals on when the Iran conflict will end. As of noon Eastern, Bitcoin tried to hold on to that $70,000 level, a benchmark that it also hit last week. Over the course of the past 7 days, the flagship cryptocurrency was down more than 4%. Meanwhile, Ether and XRP both slid more than 5%. Broader markets were also down, with the S&P 500 index slipping nearly 2% during that same time frame. To talk more about markets, CNBC's Liz Napolitano caught up with Rick Edelman of the Digital Assets Council of Financial Professionals to get his take on recent price.
Bitcoin this week, it's trading above the 70,000 level. This comes as the Iran war, concerns about it have eased, and some of Trump's comments earlier this week. I'm wondering what you make of Bitcoin trading in the same direction as other risk-on assets like equities. This kind of goes against one of the main use cases for Bitcoin that we've seen touted by some of its proponents as this kind of hedge against geopolitical risk. What do you make of that?
Yeah, I think it's a valid observation, Liz, that as Bitcoin gets more and more mature, meaning as it becomes more mainstream, as there's greater adoption, not only among retail investors, but among institutional investors, it's becoming regarded as in the tech category. And it's therefore moving more in line with the stock market, particularly emerging markets, technology stocks, growth assets, risk assets, et cetera. That's a healthy, good sign. It demonstrates that it's a mainstream asset. It's going to be treated as such. Bitcoin's predominant use these days is as a store of value. The notion of Satoshi way back in 2009 that it was going to be a new digital currency replacing fiat currencies, that experiment has failed. That's over. Nobody thinks Bitcoin is ever going to have that role. The use of Bitcoin as a transactional tool, being able to move money around the world, that's also been supplanted by stablecoins.
Right.
And so Bitcoin's claim to fame is now twofold. Number one, store of value. And second, it has the biggest, best brand in the world of crypto. It still has the number one market share by a huge amount. And whenever anybody, anywhere, expresses interest in investing in this asset class, Bitcoin is their first stop. So it's how people begin to get engaged in this asset. And for that reason alone, Bitcoin is widely considered to have staying power, more so than other digital assets. So I think your observation is valid, and it's going to demonstrate the mainstreaming of the permanency of this asset class.
Now you talk about Bitcoin as a store of value. Would you still say it's a hedge against inflation?
Well, sure, like any other store of value, but that doesn't mean that it tracks inflation identically. It isn't correlated to inflation particularly. The biggest thing about Bitcoin, unlike all other asset classes, is its incredibly low adoption rate so far. Less than 5% of the world owns Bitcoin. If you look at other asset classes, stocks, bonds, real estate, oil, precious metals, the adoption rate is dramatically higher. But Bitcoin has a long way to go. And that's a big reason why proponents argue we're in the very early innings of Bitcoin's pricing, because as there's greater adoption, you're going to have dramatic price increases because there's a fixed supply. Unlike any other asset, except maybe real estate, you have an unlimited supply elsewhere. That's not going to prove to be the case with Bitcoin. And that's a big reason why so many are so bullish about the future price.
Now you talk about adoption. You're a big proponent of Bitcoin adoption. And crypto more widely, correct? Mm-hmm. So you've recently, I think within the past year or so, you were advising individuals to allocate somewhere between 10% for more conservative investors to 40% of their portfolios to crypto. Now that the market's kind of pulled back, Bitcoin is more than 30% off its record high of 126,000-ish hit late in mid-October of last year. Would you still give that same recommendation?
Oh, very much so. I mean, if you loved it at 126, you have to be ecstatic about it at 70. So the reason that I argue for Bitcoin having 10 to 40% allocations is twofold. Number one, we have to recognize that adoption is growing, and that means Bitcoin's returns are very likely to dramatically outperform any other asset class. We talk about 5 or 10% returns for other assets, Bitcoin is going to be 5x or 10x over the next 5 to 10 years. So the profit potential is massive. The second reason that we need to have a serious allocation to crypto is because of longevity. We're living longer than ever before. We know this, and it's going to continue thanks to medical innovation and technology, which means odds are really good, according to scientists who study this, that if you're alive in 2030, you're going to live to age 100 or beyond. That means the 60-40 portfolio model, where you begin to reduce your equity exposure in your 60s and 70s, is obsolete. 60-40 is thrown out. We are replacing it with 80-20, which means you have to have more of your money in equities for much longer in your life. And if that's going to be true, if you're going to have 70-80% of your money in equities, crypto needs to be a much stronger allocation than just a 1 or 2%. It needs to be 10 or 15 or 20% for most investors. And as people begin to realize that and adopt it, that's going to further fuel the inflows into this asset class, which will result in further price increases.
Okay, let's talk about the top stories. Binance is suing the Wall Street Journal over claims of defamation. In a complaint filed in New York federal court today, the crypto exchange argues that the journal published a, quote, false and defamatory article on February 23rd. That story claims Binance, quote, dismantled a staff investigation into $1 billion that had recently moved through Binance to a network funding Iran-backed terror groups. Now, the report cited company documents and sources familiar with Binance's operations. The journal's report claims a trading account belonging to a close Binance business partner was identified as a primary channel to move the cryptocurrency, and the exchange, quote, subsequently fired the investigators who had uncovered the transfers, and the network remained active. Now, a Binance spokesperson told the Journal that investigators weren't suspended or terminated for raising compliance concerns. And in today's lawsuit, the company says it launched the compliance investigation as a result of law enforcement requests. It also conducted an independent investigation that ended in offboarding user accounts it says engaged in suspicious activity. Binance said in the complaint that it did not terminate personnel for any reporting or role in the investigations. We reached out to the Wall Street Journal, but haven't heard back yet. Next, Wells Fargo may soon offer new crypto services. The banking giant moved to trademark the term WFUSD, which would cover a range of crypto-related activities. Potential products or services mentioned on the trademark application include crypto hardware wallets, crypto trading and staking, as well as blockchain-based systems. The other major TradFi players have also been ramping up their crypto efforts. JP Morgan told CNBC over the summer it was developing a stablecoin-like deposit token dubbed JPMD. One other thing we're watching. Over the last week, federal regulators issued new guidance to loosen rules around tokenized securities. Banking regulators, including the Federal Reserve and FDIC, clarified last Thursday that banks shouldn't have to hold extra capital against securities that are tokenized on the blockchain.
They've announced basically is capital parity. In other words, that tokenized securities should be treated like a normal securities, and the fact that they're issued in a different ledger technology, etc., does not necessarily mean that from an accounting perspective they need to be treated differently. I think this complements very well what the SEC announced, a few months back, that tokenized securities are securities, and what they're doing now is just confirming that from an accounting perspective, how it's treated. It should be also the same, and that there is no need to treat them differently. That the fact that they are issuing a new ledger technology that have smart contracts, etc., does not introduce any additional risk for having to have higher capital reserves when you deal with tokenized securities as opposed to traditional book entry securities.
Wall Street and crypto firms have been ramping up their adoption of tokenized assets in recent months as U.S. crypto regulation takes shape.
I think the last, since November last year, with the change of administration and then the new appointment of the new SEC chair, Paul Atkins, and the creation of the crypto task force, I think we've seen a tremendous amount of progress in terms of regulation towards tokenized securities. As I mentioned, one of the fundamental things that the SEC said is that tokenized securities are equal to securities, and therefore the fact that they're issued on permissionless decentralized networks doesn't change the nature of the asset. That's very important because it clarifies the regulatory situation of those securities. They've also allowed broker-dealers to do custody of tokenized securities without requiring a separate license as we had before in the previous administration. Now we have the accounting treatment of tokenized securities being at parity with normal securities. So we've also, as you've seen, announced integration with DeFi trading protocols. That doesn't really require any regulatory change, but the fact that we're doing it and it's out there for the regulators to review, I think it's an important step forward. So I think at this point in time, there's very little left except more adoption and more market participants coming into the space. But the amount of progress we've done in the last year has been tremendous.
Okay, that's all for Crypto World this week, but we'll be back again next Wednesday, and we'll see you then.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.